Hi, my name is Chris Marmolejo. I'm a mortgage broker slash realtor here in the state of Texas. I also do home loans in Louisiana as well. In today's video, I'm going to share with you the different products, home loans, that you can qualify for and how they are different than one another. And in my opinion, there's a couple that really just stand out. And people say, hey, I need to save more money in order to buy a house. Well, no, you don't actually. You don't. There's zero down payment programs. There's also grants available. So many different ways. But I'm gonna discuss 5 products that you can see the differences on and how they differ, and which ones are going to be better for you depending on the area you're in Texas or Louisiana. So let's jump right into it. First, we're going to go over conventional, home possible, home ready, FHA, USDA, and VA. These 3 right here are actually considered first-time home buyer programs, and I'll go through these each and discuss the differences between all of them. So if you look at the credit score, I basically use a 720 credit score across the board to come up with my interest rates. But in parentheses here, you'll see that the minimum credit score is only needed. So they say, Chris, I don't have a 720. Well, you don't need a 720 to qualify for these programs. So if you look at conventional, the minimum is 620. Home possible, home ready, the minimum is 620 as well. FHA goes down to 500, which is incredible. Very flexible program, lenient guidelines. Look at USDA down to a 580. That's a zero down payment program, and VA will go down to a 500 as well. So this is basically are the minimums that we need to qualify you in. So if you wonder whether you qualify or not, just let me know. Call me, text me, message me, and I'll tell you. I can look at your situation to determine whether you can get approved now, or it may take you a month or 2 months, or how long it may take you. Okay. So if you look at what I basically win is a $250,000 sales price on each product. But if you look at the differences here, conventional 5% down program, which amounts to $12,500 down. Home possible, home ready, which only requires 3% down, so it only requires $7,500 against first-time home buyer program. FHA, 3.5% down minimum, so that's going to require $8,750. USDA, cool thing, $0 down. First-time home buyer program, minimum credit score 580. That's crazy. All right, VA, 0 down. Obviously, that's probably the best program and available right now. But just looking at those two, these two stand out, in my opinion, just because the amount of money you don't have to put down. So if you look at the loan amounts here, based on these down payments, you're looking at loan amount $237,500 here, $242,500 at home possible, home ready, FHA at $241,250. USDA at $250,000, obviously 0 down. Same thing with VA, 0 down, $250,000. Upfront mortgage insurance amount. So I'll discuss these, but each program varies depending on the program. Like conventional, $0 down on an upfront mortgage insurance premium. Same thing with home possible, home ready. So those two stand out in my opinion. FHA is going to require 1.75% of loan amount. So you're looking at $4,222 with the added on to this, which equals a $245,472 total loan amount. And then USDA, they're going to require 1% down here, which gives you $252,500. And the VA, 0. It could be $0 to $8,250, depending on if it's your first use, your second use, the type of service you're in, how many years you're in the military, a number of factors. And if you want to know where do you qualify, just call me, text me, and I'll tell you how much upfront mortgage insurance premium you'll be paying, if any at all. Just look at your COE, which is Certificate of Eligibility, and that'll tell me exactly what to add on to your total loan amount. Okay. So total loan amounts here, you'll see all these amounts here. They vary depending on that. So the total loan amount for conventional, $237,500. This didn't change. Home possible, home ready, $242,500. FHA is now $245,472 after adding these two, and then you got your 1% here. So USDA goes to $252,500, and then VA is $255,000. I'm just using $5,000 in this scenario. Again, that's going to vary depending on again, type of service, etc. All right, so you also have a monthly mortgage insurance amount. So if you don't put 20% down on a house and go conventional, then you're going to have a monthly mortgage insurance amount. Unless you're VA, then there's 0 monthly mortgage insurance premium. These are pretty much kind of like a insurance policy for the lender. In case you default on the loan, then the lender is protected. So that's why they charge you these monthly amounts. Okay, so if you'll see here, conventional $71 amount, Home Possible Home Ready is $95 a month, and then you've got FHA at $110, and then the USDA is $74. For a zero down program, only $74 compared to this is pretty appealing, okay? So in this situation, conventional, just because you put more money down doesn't necessarily mean you have a better rate. So if you look here, at 5% down, going conventional, you're paying a 6.75% rate. As opposed to Home Possible Home Ready, you only put 3% down, your rate is lower than if you put 5% down. Again, because this is a first-time home buyer program, so we're actually rewarding you a little bit and giving you a better rate here. So in this situation, I would go here as opposed to here, okay? So 6.375, FHA, 5.875%. You also see the same thing with VA, 5.875%. They're generally about the same rate every single day. USDA is a little higher, 5.99%. Well, zero down, again, that's still a pretty good rate, less than 6% right now. So that's, a very appealing product. So if you look at total payments here, conventional, 5% down, $1,611. So you're actually paying more per month than if you're going to go USDA. You're only paying $1,586 a month, which is crazy. And then you can go FHA at 3.5% down and pay $1,562. And then you also have Home Possible Home Ready. Again, a lower rate, so a lower payment. So then here, so I would go again here as opposed to here. And then you've got your VA at $1,508, which is the lowest payment. So that's the different payments you'll see on these products, and why it doesn't always make sense to just wait to save more money, because you can go zero down here or even less here with less money to buy now. So if you have any questions, call me, text me. I'll be glad to answer any questions. If you want to know what your property tax rate is, or your property, estimated property insurance you're looking at, I can tell you depending on the county you're in. But these payments, just so you know, only includes principal, interest, and mortgage insurance. It does not include taxes, property taxes, and homeowners insurance. And again, that's going to vary. So, but you get an idea of which programs are better and have a lower payment, and it tells you a little bit, about what you should do, about thinking about when should I buy. Do I need to save up a couple more $1,000s? What should I do? Well, if you want to know, call me, let me know. And also based on your minimum credit scores, if you don't know if you qualify or not, call me, text me, and I'll tell you whether you do or not very quickly to find out. It'll take less than a couple hours to find out. So if you're self-employed, it may take a little longer to look at tax returns, etc. But just give me a call if you have any questions, and if you would comment and let me know what county you're in, when you're looking to buy. Any questions, I'll be glad to get back to you as soon as possible. Thanks a bunch. See you next video.